Good afternoon, ladies and gentlemen. Thank you very much for joining for part two of today's event, a focus on women investing. I think you heard earlier Chris Forbes discussing about the focus of women investing and the importance to obviously attract those types of traders to CMC markets and to the wider investing space. So today we've got a panel of experts here who are going to share their views. But first of all, I'll just do a quick introduction to our moderator today, Tanya Rolfe. So Tanya works for a company called Sophia, who CMC has partnership with earlier in the year, and their primary focus is on financial literacy for females. So I think it ties in perfectly with today's topic of discussion. So without further ado, Tanya, I'll let you take the stage.
Thank you very much. Thank you, and good afternoon, everybody. I am Tanya, co-founder of Sophia, based here in Singapore. I'm very proud to partner with CMC Markets Singapore, and also with JP Morgan, who Pauline is representing today. I'm very happy to be here with an amazing panel, three ladies, all talking about women in investing. And the reason I'm here as moderator is that as founder of a company focused on financial literacy for women, I believe it is absolutely at the heart of achieving more women to be investors in all asset classes. So without further ado, I'm going to hand over to our three ladies joining us here in the room today. And also we have Shanti joining us on video. Hi there, Shanti. We're going to start with Jennifer. Can you introduce yourself, please?
Hi, I'm Jennifer Buckley. I'm the founder of Sweef Capital. I've been in the private equity industry now for 25 years across Europe and Asia. Sweef Capital is a private equity fund focusing on growth capital investments in healthcare, education, food and climate resilience in Southeast Asia. What's unique about us is we are an impact investing fund where we're seeking impact outcomes associated with women's economic empowerment. So very much linked to the topic of this conversation today.
Thank you, Jennifer. And Pamela.
My name is Pamela Ambler. You guys had heard from me earlier, but as an introduction, I do work for a company, JLL, which is a commercial real estate firm. So we, as part of the capital markets business, basically advise institutional investors on buying and selling of commercial assets like offices, logistics, retail. I actually come from a background of over a decade being a financial journalist. So while I didn't ever play the role of education, I was responsible for sharing information and communicating financial information to the masses.
Thank you.
Good afternoon. My name is Pauline Ng. I'm a portfolio manager with JP Morgan Asset Management. Have been investing in public equity space for the last 20 over years, 18 years with JP Morgan and the previous 5 years with another firm. I've also recently launched a new product that focuses on social advancement in global emerging market. So really excited to be here with this very esteemed panelists and then to share and exchange our thoughts.
Thank you very much. And Shanti, can you hear us?
Yes, I can.
Hi, good
can
afternoon.
You hear me?
Yes, we can. Yes, great to have you
Great.
with us. Could you just, for anyone in the
you.
room that doesn't know who you are, could you please introduce yourself?
Yeah, so I'm Shanti Pereira. I am a national athlete. I have been in the sport since I was 9 years old, so quite a while, 18 years. A bit less than 18 years. And I recently just got back from the Asian Games that was held in Hangzhou, and I brought home Singapore's only athletics gold medal after a 49-year wait. So I'm currently in Korea right now. Thank you. Yeah, and I'm really excited to be a part of this panel. Something, new for me, but very excited to hear what, all these ladies have to say on this platform. Yeah.
Thank you, Shanti, and congratulations from all of us. Thank you. Let's start with everyone on the panel, Jennifer, Pauline, and Pamela first. What prompted you to start investing? Perhaps Pauline?
Sorry. I think that would be an easy one for me since it's my day job. I've been doing this for 20 over years. But I think the interesting, maybe just to share a bit of the background as well, which is also, I think, very for today's session. I think when I was growing up, I always thought that investing is for the rich. You know, I came from a very ordinary family, working parents. I always thought that investing is not for me. And through my college years, I think when some of my more affluent friends were dabbling and trying in the stock market, I was always thinking, nah, I'm not going to do that. It's not something I like. It's just too risky, too scary. I'm not good at it. And lo and behold, I've been doing this as my day job for 20 over years. So hopefully maybe I can share later on also some of my learnings after I've been doing this for 20 years and demystify investing, at least in the public equity space.
Thank you. Did it take some time in your career before you started personally investing, that had the confidence to start investing?
Well, I would say, I think in the first few years, I was so engrossed in perfecting my career. I was single-mindedly focused on that. And then afterwards, I was then focused on being a mother as well. So I would say the investment really came at a later stage. And on top of that, I think being with a firm like JP Morgan, there are obviously a lot of restrictions for us as well. So I think my biggest investment is in my family and in my job.
Thank you. How about you, Pamela? We're having a lot of microphone issues here.
So I started with being interested, my university accounting 101 professor, Michael Willoughby, he recommended, or actually I should say made mandatory a reading, which is Michael Lewis's Liar's Poker. So it talks about this bond trader. It's sort of a self-autobiography. And it's very much a representation of what Wall Street was like in the 80s, along with books like Barbarians at the Gate, which then also later turned into films, which is quite entertaining. I found that to be entertaining. But my takeaway from that, even though the book represents Wall Street as in not a very good light, my biggest takeaway from it was that it takes individuals who have very high risk tolerance, and also the way these financial firms were portrayed were that they would take advantage of people who weren't financially literate and didn't understand things. So I didn't want to be in that vulnerable position, and I felt like I had a very high risk tolerance. And so that's what got me interested very initially in investing.
Very interesting. Over to you, Jennifer.
I was just laughing at Pamela because I read the same books when I was at university. I was thinking about, because I know you mentioned you were going to ask this question, I was thinking actually about for myself how I got into investing, but it's actually, as to why, it's kind of varied, because I came from a similar background to Pauline, but my brother was actually building out a business when I was in my teens and 20s. So I got very involved in building that business. I got this early exposure to entrepreneurship, which I guess started my curiosity around business. And then when I went to university, I studied law and finance. And while I was reading The Liar's Poker and Barbarians at the Gate and things at the time, is in my master's I was specialising in securities regulation, trying to really think about how to tackle those issues so people weren't getting taken advantage of. And even then, like I look at my mum, when she was in her 50s, she started investing in the stock market, which, you know, I think was unusual for someone in her generation with her background. And then for me, it kind of went from there. And I think linked to Pauline, you know, working in companies where I was given stock options, had, you know, similar restrictions making it harder to invest in public companies at times, just actually having that where you're opening a brokerage account. So you're kind of just starting to invest. And then, you know, from there, like my colleagues on the panel, my day job is making investments, and I went back full circle when I was in my mid-20s, really wanting to come back and be involved with building businesses, and that's what led me into private equity. And what I love about that career is really being able to work with entrepreneurs to support the development of their businesses.
Thank you, thank you. There were some themes there around, which I think are quite common for women when they start investing. Often the stories I hear is that I was a late bloomer, and it's a term I also use, and it wasn't until my 30s. And with that in mind, I want to throw over to Shanti, actually, as someone, someone much younger than myself. Have you started investing yet? Or would you consider starting to invest at this stage?
So I am pretty new to investing. I don't have that kind of experience, which is why I'm really excited to be part of the CMC team and to be working with them to really start this journey. Because, I do feel like, hearing from you guys, it was something that I thought was pretty intimidating, when I was in school and when I was a bit younger. But then I realized, it's something that I kind of do in my everyday life. I put a lot of investment, I put a lot of hard work into, my career, what I'm doing right now as an athlete. So, at the end of the day, I'm looking at long-term benefits, right? So at this stage, I think it's definitely something, very worth getting into. And ultimately, you're planning for the future. So, if building wealth helps you, be more protected and just, lead a better life in the future, then it's definitely something that I can start at this stage of my life.
Fantastic. You said some great words there. Wealth building, protection, long-term, all fantastic phrases when you think about investing. And of course, you have the benefit of starting early. So you're in a great position and in great company with this panel as well to hopefully learn some tips and tricks. So I want to ask the ladies in the room what you consider are the reasons, some of the common reasons why women start investing and how they differ to men. Jennifer.
It's an interesting question because I think, with all things, there's many varied answers to that. And I'm trying to think about it from the perspective of a lot of the work we're focusing on is Sweef Capital at the moment, in the sense that we invest with women entrepreneurs, and I've really worked hard because I've been in the private equity industry now and seen the lack of diversity in that industry. So I've always been focused on how do we have people from more diverse backgrounds, and particularly women, coming into the industry and being retained. But more recently in our journey, as we've been going around the world raising for our Women's Economic Empowerment Fund in Southeast Asia, I've been meeting a lot of women clients and seeing, very, very perspectives. I've seen a lot of wealthy professional women that actually don't feel particularly empowered at the moment to actually go and make. They would like to see their portfolios move in a way that they're more sustainable, and there's various bottlenecks preventing them from doing that, whether it's other family members or tax advisors or others discouraging them from pursuing that vision, or even women working in large financial institutions that want to see their institutions investing in a similar way. Those institutions may be articulating to the market they're doing that, but actually what they're seeing internally is they're not following that through with changing how they're deploying. So focusing in just a little bit on the woman, the woman clients, and sort of the various backgrounds that they're from and what has been leading them into investment. I think it's varied. You have a whole portion of women, very much like the woman on the panel, that we've moved into the industry. So it's, what we do is a day job, and we've built understanding that way, and we've followed that through into our personal lives. I see other situations, and then you have the women that have some some wealth. So from the beginning of their sort of professional careers, they have a team around them that's supporting them to be doing that. You have other women that it's personal circumstances that have led to it. So there's been something that's happened in their lives, whether it's a divorce, it's their partner passing away, that's really foisted it upon them, and they felt very vulnerable at that point in their lives. And just others that, again, similar to the entrepreneurs we're working with, that have been building businesses, sold their businesses and come into it that way. So I think it's varied. Now, where I see it's different from what I've seen when I think about the men in my life, I mean, I think what I've generally seen with men is it's sort of something that they've already started thinking about in their 20s and doing. So it is, but it's a broad generalisation. But I think that's what I've seen in the work that we've been doing and what I've seen in my personal life over time.
Thank you. Yes, couldn't agree more on that. Pamela, any differences you see between men and women and the catalyst for starting to invest?
Yeah, I think women are trained to be a bit more altruistic. And when it comes to financial decisions or money, they probably have a tendency to think a little later, think about it a little bit later. There's also, I think, when they look at the industry, there is, I don't want to say a gender bias, but you tend to look at where you see role models, and if there are fewer people that you identify with, whether that is, in any capacity, you have a tendency to perhaps think that might not be the pathway for you. But I think what's very important to address is I wouldn't go to the extent of, again, I'm going to quote a Hollywood Gordon Gekko that says greed is good. I wouldn't go as far as that, but I think there's a message about the importance of financial security, because what that provides is not only, or people could say money doesn't buy you happiness. Well, money buys you healthcare. Money buys you options. It provides you freedoms. You can buy Taylor Swift tickets. So it makes those small luxuries feel, you don't feel guilty about them. And I think that's partially a mentality that has to change.
It's actually a really good point, and I teach this at Sophia a lot, and it's one of the tools I use to get women engaged with financial education. It's when you think about engaging in financial services, and you think about it as in, the typical, very traditional financial ecosystem, it's very easy to assume that you're not part of that, and this is for people who just want to be greedy or, or more experienced than myself, or to exclude ourselves. Women are very quick to exclude themselves from a situation, from a scenario. But when we can get women to connect the dots of actually thinking about your money and raising and wealth building, and allows you to invest into ESG or whatever it is that is really important to you. Women are twice as likely to invest into ESG. You can do some of those things, those luxuries. And so connecting those dots between actually wealth building, it's not about greed, it's about actually affording myself the ability to do some of the things that matter to me. Very interesting. And over to you, Pauline, on the same question.
I'm going to keep my day job, clearly, since I can't fix the mic. I think the biggest difference is the attitude. So I think, I'm going to sound like I generalize, so please excuse me. So I did do a little test at home. I have a 13-year-old boy, and I had a 17-year-old girl. So ahead of this panel today, I asked them this question last night over dinner. So you have to start investing your money. How are you going to go about doing it? So I posed these two questions to my children. I'm going to hold it and tell you the responses because it will gel in with what I think the key difference is. I think male in general look through the process of investment for the excitement, for the fun, for the thrill of it. Women, on the other hand, worries a lot about the outcome. So therefore, they approach investment a lot more guarded, a lot more careful, which incidentally, therefore, make us better investors, just saying, just putting it out there. So that is the big difference, the attitude towards investment. And no surprises, when I ask those questions to my children, my daughter first responds, going back to your role model, I'm just going to leave it to mommy. I don't know how to do it. Mommy's doing this for 20 over years. I just leave it to mommy. Which of course I did not accept the response. I pushed her a little bit more. My son, my 13-year-old son, who I just shared with Tanya just now, just failed his Chinese exam, right? And he told me, he said that, oh, you know, mommy, I was looking at Yahoo Finance and I've been looking at like Microsoft, Tesla, Amazon. They're like really good. They're going up and up. I think I will buy these stocks. So you see the response. I think the male looks for the thrill, the excitement. The female, it's a lot more concerned with the outcome. And therefore, the approach is very different. And of course, as a mother, I took the opportunity for a very quick life lessons. I say, think of investment and like a sport. I have to think of a sport. It's like learning how to ride a bicycle. You start off with the trainer wheels. You want to be very careful. Then you might need somebody to support you when you take the first step on the adult bicycle. Maybe one day you will be taking that mountain bike and crossing all sorts of terrain. But not everybody will be Warren Buffett. But that's fine. It is your own journey. But once you visualize that you will fall, and it's okay to fall, and you visualize the success and the outcome, and do it step by step, it's actually not so daunting. It's actually not so scary at all. And most importantly, as Shanti will tell you, when you learn a sport, you start young. Because when you fall, you bounce back. And over time, you will have the muscle memory and you will be able to do it and enjoy the process when you do it.
Thank you, Pauline. You've actually moved us on to the next question very succinctly, which is around some of the challenges that you faced when you started investing. And one, I'm going to throw something out there as a challenge, as an obstacle, and your example is a fantastic example of what I consider to be one of the biggest challenges for women when it comes to investing, and it's confidence. So I think we can all agree that financial education is pretty lacking. And I say that as a mum of children in school, but also as the founder of a financial education company, I know where we're lacking. We all know what we need to do, but unfortunately, when the world is not moving at the pace in the direction that it should be, so financial education is lacking. It is what it is. We need to deal with that. The schools are not necessarily moving at the pace that we need them to. So there is a confidence gap. So boys and girls are growing up without the financial education they perhaps deserve and need. Parents are often ill-equipped to teach their children themselves. Schools obviously don't have a great deal of space in the curriculum. So boys and girls equally have a lack of financial education. But we see a big difference between boys and girls when it comes to investing, even at a very young age. Even with your 17-year-old girl and 13-year-old boy, you see it there. I recently did a workshop with some university students in Singapore. And there were a group of boys and a group of girls, and they were all the same age, all within a year or two of each other. And I asked them to write on the wall their financial literacy out of 10. They were part of the Harvard mentoring group from a group of polytechnics and universities in Singapore. And we gave them pens to write on the wall. And the boys gathered in one corner and the girls gathered in the other. And for the boys, they wrote their number on the wall, and the girls did the same. So for the girls, there was nothing higher than a 3 out of 10. Okay? It was all 2s and 3s. For the boys, there was nothing lower than an 8 out of 10. There was even a 10 out of 10. And myself and the two other finance professionals in the room, we weren't a 10 out of 10. So this 21-year-old boy was already a 10 out of 10. And this is the confidence gap. So the financial literacy gap, is financial literacy or lack thereof exists for everyone, but the confidence gap is real. So for me, when I think about the unique challenges faced for starting investing, I think it's confidence. And I want to throw it open to the ladies on the panel in the room. To see if you feel that you have a confidence gap.
I'm really curious to hear Shanti's view on this as well, as someone coming from the younger generation. I do see the confidence gap, and I wonder what is the right way to change sort of the messaging a little bit to give women more confidence. Because I was thinking about what you were saying as far as, thinking about giving options and other aspects to sort of position women to be thinking about investment more. But I just think generally about the women around me that we're even that we're working with the company, and how much they think about making a difference to the next generation, and all the energy that we put in as mothers or carers for people. And I'm wondering if that's, part of the bridging of that confidence gap is sort of to think about financial education in a way that supports a view that actually thinking about investment is also important to the next generation in the same way that thinking about education and healthcare and all these other aspects that people are thinking about and mothers are thinking about, to try and encourage them to not see it as so daunting, see it as something that they should engage with. So that's what's been going through my mind a lot over the last year.
Thank you. I'm going to just start with the room, and then I want to hear, before we go to Shanti, but how about you, Pamela?
I certainly agree with confidence, and you see that, again, I don't think necessarily just when it comes to investing, it comes to a lot of different aspects of the gender difference. I do think that, a lot of times I hear women asking questions about, they feel like they don't know enough, and they're afraid to ask questions. A lot of the terminology, I feel like it's not designed to keep people out of it. It's to simplify things, or rather to make it more efficient. But because there are so many acronyms, there are very specific investment terminology, it can be intimidating. I think it is important to, you always hear women apologizing for asking a question, or assuming that this is something that everybody else in the room knows, but just that they don't know. But oftentimes they are very valid questions, but it's just the appearance of whether or not they have the confidence in saying, I don't know the answer, tell me. And it's not, nobody has the perfect answer when it comes to investing. So yes, it is very important, the educational aspect, the financial literacy aspect for people to help close that gap. And I do think with a lot of regulators are aware that there are a lot more adoption when it comes to online investing avenues, and therefore there is a responsibility for these service providers to also provide enough information for people to make educated decisions. And that in itself hopefully will level the playing field, because a lot of that is done virtually.
And Pauline, other than the confidence gap, which we've clearly identified, any other unique challenges for women?
Well, I think women are just so busy with multitasking so many things, right? Society puts on so many other responsibilities on women. So I always feel it's kind of an unfair playing ground. But having said that, I think I feel responsible, given that I have a daughter, I have a son, to make sure that that does not perpetuate into the next generation. So I would say, like, my solution to all these challenges is, I think some of the work that you guys are doing, it's awesome, to demystifying investing. It's not that difficult. Break it down into small bite size, right? People can understand, feel more comfortable, try it. And I think to use simple examples, I always feel is very powerful with young people. So I was just telling my daughter, right, imagine you have $1,000. If you put it at the bank that pays you 4% interest rate, right, after 10 years, do you know how much that amount of sum will be? Right, this is a 17-year-old that perhaps hasn't thought about the power of compounding, right? And when I was shared with her, and I hope my math is correct, 1,005, roughly, after 10 years, I'm hoping my math works. So, you know, for a child, she said, oh, wow, that's quite a lot. So I think each and every one of us can sort of like bring solutions, such as these small little steps, to really demystifying the whole thing about investment. And I always tell them, when somebody tells you something really complicated and you can't understand, it's either it's not a good thing. If you hear something that's too good to be true, it's definitely not true, because there's no free money in this world. So I say, don't understand, don't worry about it. Probably half the room didn't understand and nobody would just ask a question. That's it.
Yeah, women being very busy, and I think that's a great point that you've made there. Women love to know everything about everything before they take some action. And if we're too busy to know everything about everything, we often don't take action. And I think that is a big problem for women. Which leads me to Shanti. Let's bring you back into the conversation on two of those points, which is one, the confidence gap. Are you feeling... Are you understanding what we're talking about when we say the confidence gap?
Oh, yeah. I mean, I personally feel like, you know, in athletics, confidence is one thing that really gets your headspace where it needs to be before a race, right? And sometimes I feel like that there is a difference with how men and women approach this kind of confidence. Sometimes, I guess for me, you know, being a woman in sport, if I come across as being too confident, I'm seen as maybe a bit too arrogant, but it's not seen that way for men. So I guess sometimes women feel like we have to kind of shy ourselves away from showing that part of ourselves, you know, in front of the crowd, in front of whoever is watching us. But I think that was one thing that really made a difference in my career, you know, just being confident in yourself, in your abilities. Just like I said, clears up your whole headspace and makes you feel a lot more free in what you're supposed to do in the task that's, you know, coming ahead. And I mean, how you get there is really, it's a support system. You know, having people in your corner and, you know, I like what Pauline said about the learning how to ride a bike and having someone there to, you know, catch you at first if you fall. That's really how it feels like. And then once you get the hang of it, you know what you're supposed to do. So yeah, it's a big thing in what I do.
Thank you. So listening to some of the motivations, Shanti, of the ladies on the panel today about how they started investing, and obviously we've talked about some of these challenges, the confidence gap, the fact that for many women, we get very overburdened with the lion's share of household obligations, family obligations, all of these challenges that are very unique to women. Are there any conclusions that you've been able to draw so far on how best to sort of start to think about your financial future and the security of that?
Well, I guess, you know, hearing from the other panelists, I think it's just something that we have to find the confidence in, I guess. You know, me, you know, being kind of like an outsider and new to this whole platform, I guess it still is a bit intimidating, and I do need to find sources to just educate myself on how this whole process works and and everything like that. But I think knowing that, there are women, very strong women, like the 3 panelists here who are in this line of work, it makes it a little bit more reachable, I guess, not something that I'm a complete outsider from. And I mean, from outside point, I guess you guys are kind of like role models, right? You're in the line of work and you know what you're doing. So there is someone I can look towards to say like, hey, you know what? I can do it too. So yeah, that's kind of where I'm at right now.
Yeah. If you can't see it, you can't be it. So we do need more women role models like our panelists today for you, Shanti, and future generations of girls. Let's spin things around a little and we've talked about some of the unique challenges and obstacles that women have faced, but let's talk about some of the unique traits of women and why they actually make, I personally think, and I think it was you, Pamela, who mentioned that, no, Pauline, it was you, mentioned that women make amazing investors, and statistically we do. So let's talk about some of those unique traits. What's a sort of number one trait that you see that women have that does make them such great investors?
I'm going to say something a bit controversial, self-doubt. Because I think that's what makes women very good investors. Even though I've been investing for 20 years, I actually think one of my strongest point is self-doubt. You might think it's negative, but actually it is not negative because I turn it into a positive force. Because when I start questioning my assumptions, that's self-doubt, right? When I start questioning things I see, I hear, it forces me to do more work. It forces me to have a different understanding. It forces me to talk to different people to get different perspective. So I think that's probably one thing that is actually positive in my sense, and hence it actually makes us a lot better investors. Because essentially there are 2 types of investors, right? There are those that perhaps their up and down is extremely volatile. When they get it up, they get it really, really right. When they are down, they could really crash and burn, right? Whereas I believe in time in the market, not timing the market, right? The power of compounding. When you find something good after you have done a lot of work, when you clear all your self-doubt, you know this is the winner that you're going to ride for in the long term. It also gives you very clear signposts, what to look out for that might then alter your thesis about this investment. So I think that's one of the uniqueness about female investors. When we make a mistake, we always internalize, we remember the lesson from that mistake. I don't want to generalize, but when men make a mistake, they tend to externalize the mistake. And hence the lesson becomes slightly less ingrained in them. And I think that's actually why females are very successful investors, in my opinion.
It's a double-edged sword, that self-doubt, isn't it? Because it's self-doubt that prevents most women from investing in the first place. So for people like you, Pauline, experienced investors, that self-doubt, it supports you and helps you become a better investor. For a lot of women, it's prohibitive to them. So it is a double-edged sword, but I can understand what you're saying there, and also being able to be in it for the long term and not be as perhaps ego-driven with the investment shopping and changing. Over to you, Pamela, for a unique trait for women.
I wouldn't say this is necessarily unique, but it does kind of go along with self-doubt, not having enough confidence, which is imposter syndrome. I get asked that a lot, of how do you overcome that? And I do also think that's applicable to taking an action in investing. So in my view, the only thing you can do wrong is not doing anything at all, because you're aware and you know that you need to take action. And this action can be very small at the very beginning. And this is not maybe the best example, but invest in things that you know about, consumer brands that you use, consumer brands that your children use, because oftentimes the kids are, ahead of trends, or they pick up trends much faster than perhaps the older peers. But, when it came to, for example, Bitcoin, there was a lot of talk about it. And I just remember this was back in 2012. I asked for one for Christmas, and look at how people view cryptocurrency trading now, so much later. But, invest in things that and perceive it as being a long-term investment. You're not there to day trade. You're not there to, get too complicated at the beginning. And, as over time you see the performance or rewards, then yes, maybe increase, your allocation or what you feel comfortable investing in. Not necessarily unique. I don't know if that answered your question.
It did. Thank you. And over to you, Jennifer.
I think what I've seen generally, and then again, it's a real generalization, but it comes back to some of what we're talking about today and why it's so important to have support networks, is because it's more natural for women to work in a very collaborative way. And why that is, in an industry like I'm in, where that is an advantage when you're working in private equity, and, well, I guess two things. One is the trait around being collaborative, and I think, I agree with Pauline and Pamela in this view that I think women generally look at the long term and more naturally looking at more fundamentals and being value-based investors, and I see that in the entrepreneurs we're working with. So the amazing thing about the women entrepreneurs that we're working with is, they will come in and they will know their business really well. The way that they've put together their business planning and financial model is very defensible. If anything, we're needing to sit there and actually talk through different growth initiatives that they want to pursue, and what we could be doing if we put some more capital behind them. So, there's many situations when we're dealing with women entrepreneurs where we're actually increasing their projections, where it tends to be when we're dealing with more male, well, that's historically been what I've seen as I've been dealing with more male-led businesses, is more often than not your haircutting, and often, when it comes to thinking about .com days and then, all the recent trends in technology, these have often been, quite severe haircuts over time, or really that, people are coming in, or men are coming in and pitching a vision and growth ideas with little substance behind details as far as financial projections and other things. So I've definitely seen that difference there. And being collaborative, where the advantage is in my industry in that regard is it means that the way as women investment professionals we're tending to work with companies is we are much more collaborative in our approach. And what that means is the leadership in those companies tends to be a lot more open and transparent in the information that they're giving us, which generally means we have less surprises coming at us. Like we sort of know that there might be a crisis coming well in advance, so we can plan for it. And I think that, that's a significant investment advantage.
Thank you. I think that I want to touch on the gender representation of within financial services ecosystem and all of the different asset classes that everyone represents here today. But before we do that, Shanti, as someone who, by your own admission, is sort of on your starting out, looking to start to make some long-term financial decisions for your future. Is the financial services ecosystem as it stands today, does it represent you? Do you feel that there's women role models? I know we're looking at 3 amazing on the panel today, but is it something that is perhaps off-putting to you at the moment, or do you feel that's not really a consideration?
Well, honestly, now as I hear more about it, it is something that is not that off-putting. It feels like something I can get myself into, because it doesn't feel that intimidating anymore. And it's really nice to hear that a lot of what the three of you said about traits in women in investing, I can kind of relate to it, because it's a lot of what I feel are unique traits in athletes as well. So I suffer a lot of self-doubt. I have imposter syndrome as well. And I feel these things, and I tell my coach about it, and he actually tells me, hey, those are good things. Those are good things to have as an athlete. It gives you a different perspective, and it gives you learning points and experiences to develop and grow as an athlete. So a lot of the self that I used to feel before, I channel it into just positive energy now. And how I do that is exactly what Pamela said. It's doing and investing in what I know, so I focus on the things that I can control, because just like, the investing market, it's so many things that are beyond your control, right? So what you can do is really just focus on what you know and what you can control. So I guess, hearing all that and finding that kind of similarity and familiarity with that, it makes it a lot more inviting, to start this journey.
Good. That is very positive to hear. Because gender representation within the financial world has been notoriously very low. I think things are changing, and I'm keen to hear the views of the ladies on the panel. For me, I can see in my role, I see more interactions with women in senior positions. A lot of our clients hiring us are women. So I definitely see changes afoot. Would love to hear from the three ladies in the room as to how you see how gender representation is changing or has changed, particularly from you, Pauline, because we've spoken about this before today, about how things have changed in your career.
Yeah, I think when I first joined JP Morgan, at that time it was still called Jardine Flemings, I think I was one female, or maybe one out of the two female in the entire investment desk. Okay, but we have made huge progress, right? Today, JP Morgan Asset Management, I think we were recently voted in Asia as the most diverse portfolio manager. So definitely we have made huge improvement, but it is still underrepresented. We come from a very low base. So we definitely have to do more. And I think one of the observations we see is that at the entry level, when we hire analysts, we tend to get 50-50 between the gender mix. But as you know, because of all sorts of personal reasons, situations, the female actually starts to drop off as they progress further on in the career. So I think the firm, like our firm, JP Morgan, we really try to offer flexibility, be very inclusive to all of our investors. If they need, like me, if I have to be at home for half a day, my boss is perfectly fine with it. So I think role modeling is very powerful, and here I have to say that I have a boss who absolutely role models that. So he's actually based out of London. I loved it when he showed up for a meeting like 3 minutes late and he's panting and he goes like, sorry, I have to put my kids' breakfast, I have to bring the kids to school because my wife has already left for a meeting. I said, awesome. Because the next time when I do that, I don't have to hide, I don't have to pretend, I don't have to feel very guilty about it, because you've just role modeled to me that it is okay. We all have a life, we all have other commitments in our life too.
Pamela.
When it comes to JLL, you do see a lot of female representation, not just within the company at different levels, but they do make a very conscious effort in moving them up to leadership, giving them the support. And there is a very conscious effort, not just on hiring, not just because diversity and equity inclusion is like a corporate catchphrase. It's because genuinely you do see good performance, better performance, when you have a diverse group of individuals and employees bringing different viewpoints to the table. Now, when it comes to things like our town halls, when it comes to when we have client events, when we have people speaking on panels, we are always very conscious to provide various different viewpoints, and I think that is important because it is through these avenues where you see and hear the representation. And can we improve upon it? Yes, there's always space. And when it comes to, I think, our male colleagues, the allyship that is provided is very important to vocalize that and to demonstrate that and show your employees and the team and your clients that this is front of mind. It is, at the end of the day, better business.
Thank you. And finally, Jennifer.
Yeah, so I'll talk a little bit about the private equity industry. So within our industry, there has been a lot of work that's gone on, as I mentioned at the beginning, around supporting diversity programs in the industry. But to what Pauline has mentioned, while there's been a lot of recruitment of women coming in at the junior levels, the industry is continuing to lose women at a certain point on their career journeys. And private equity is you need to take a very long-term view on it to be successful because funds have a 10-year life. But it is changing. And there's a lot of work going on globally to not only support women in the industry, but to support women to be able to come out and set up their own funds, which I think is important because it links into what we're seeing from the entrepreneurship side. The reason why I'm so excited about women's entrepreneurship and what we think of as inclusive entrepreneurship, the next generation of entrepreneurs coming through, is that why we see Southeast Asia as standing out in that area where we have 30% of all businesses in the region owned and led by women today, which is quite significant compared with where the rest of the world is in that area. And what's happening in the region is women are coming out of their industries in their late 20s to early 40s at the point in time when they're starting to think about families, and they're feeling that if they set up their own business, they will have more flexibility and being able to pursue what they want to do from a professional perspective. So that's why for our industry, this ability to allow women to do that in our industry and set up their own funds is important from a trend perspective. But it's not just about, I think a link to what Pauline's saying is it's not just about seeing the diversity coming through in the industry. It's also about people working in the industry understanding those gender dimensions and having the male allies, having those role models of men that are also out there sharing care responsibilities and being happy to reflect that in their workplace environment. And why I think that's important from an investment, when we look at the advisory perspective and we look at the support given to women clients and the need to educate them, it does have an impact there. That's what I see with the women clients we have, because we need the advisors to be aware when they have a couple in front of them or they have a woman client in front of them, they may need to think about how they're communicating with that client differently. And just one anecdote, an advisor was mentioning the other day, he was horrified. One of his junior colleagues, he observed this, had a couple in front of them in the room and was just talking directly to the husband and ignoring the wife, to the point where the husband turned around and said, look, I really think you need to be talking to my wife. She's read through the perspective, she's read through all the information. She's the one that is actually going to be making a decision here. So I think we've just got to encourage our institutions to be really supporting professionals working in the industry, to be aware of those differences.
Thank you, thank you. And to summarize, I would say positive strides moving forward towards gender equality or something resembling that. But I think there's still a long way to go. And I think that just the mere fact that we're all talking about it is fantastic, but I don't want us to assume that that means things are getting better at a material speed, because actually it's quite marginal, the improvements, but they're happening. So trying to focus on the positives, I think it takes more than just to be talking about it, and we actually need to see the action. So I'm going to finish there because we're running out of time, and I've run out of time for my last question, but I'm going to throw it open to questions from the audience for our panel.
Thank you very much. Excellent discussion, by the way. Very well prepared, which is quite different to the one previously. So therein lies my first point. In my experience, I've grown up and worked around, fortunately, very strong women, very powerful and quietly confident as well, particularly in this industry. At the beginnings, more so within portfolio management, and I think that's still the bias today. Not so much trading, and I think that probably speaks to the risk mentality somewhat, and maybe the chimp paradox, which is the male brain versus a female. And I think, I just wanted to ask a question around the confidence point, really. Is it confidence, or is it just a difference in that sort of genetic makeup whereby I think guys are blind risk takers, for the most part, whereas I think women are more calculated, considered, and consistent, which is why the performance comes through. So from a risk perspective, maybe you can talk to that. From an outcome perspective, maybe you can talk to desired outcomes versus guys versus girls. And then maybe what motivates you within your stock picking capacity. What do you lean towards? Shanti, the fear, how does that play a part in your performance? And then maybe if you, Tanya, if you can talk to how you would characterize the sort of difference in the learnings, male, female, etc.
What a great question.
Do you want me to start first?
Go for it, Pauline.
Okay, so what motivates me? I love investment, right? So I alluded to that when I gave the bicycle. I think when I first started, I was afraid. And I think women are always afraid of failure because we don't like to be judged. We care a lot about what people think about us. I think that's one trait about women. Thankfully, as you grow older, you really don't care what people think about you. I think that's an advantage with age. So I think when I started in this journey, I was really afraid. But as I have learned, I really enjoy investment. I mean, I can't imagine any other job that offers me this opportunity to meet the smartest people you can find in the world, to discuss businesses with them and pretend like I know something when actually I've never ever ran a business myself, right? It's a privilege. And that's the first point. I think the second point is that I see this whole thing as a big puzzle. We all have so much information. How do you take what is the most important part of the information out there and to create this puzzle for yourself, right? And, you know, I talk to a lot of people, I read, and I have this habit of journaling, which my kids laugh because it's so antiquated, right? Who keeps a journal these days, right? Whenever I see something, I read something, I hear something that really resonates with me, I put it down in my little journal. And it accompanies me in this journey. And every time when I have self-doubt, I open this journal and I'll be very inspired by things that I've read. I mean, example, right? I think it must be from one of the very famous portfolio manager from London that retired a couple of years ago. And in his annual letter, he wrote this statement, which is a very simple statement, but really, really powerful. And I'm probably misquoting him a little bit, but the essence is something like that. It just doesn't sit with him, it doesn't square with him when people expect reasonable people doing reasonable things to have extraordinary outcome. How simple is this statement, but it resonates with me. So I feel very privileged to help my clients achieve their financial goal, and in the process, it's an amazing journey for me. I learned so much from so many people I've met over the years.
Do you find that your portfolio, your selected names within your portfolio, differs or has a distinct bias in terms of how you risk select, in terms of how you select for maybe an ESG tilt or a...
Right, so I run different portfolios, and I see my client is looking at me, my policewoman behind is like giving me this dagger stare, because we're not supposed to talk about anything about portfolio or investment. But I like to maybe answer your question slightly differently. I like simple things. Simple things are very beautiful for me when I can understand. And when I look at investment and when I go about understanding company, I have a very simple model, right? My first question is, what is the value you're giving to society today? What product or what services are you giving that is solving a problem or helping people to do something better, more efficiently? Right? The second thing is that, do you have the processes internally to make sure that what you say you're going to do, you can actually do? And finally, how scalable is what you're going to do? So every meeting I go into, I have these 3 questions in my head, and I love it when management fumble at a simple question. One last example, because I'm so passionate about investing. I recently met a drink company that sells vitamin C. Right, and it classified that category as a functional drink. And my question to the CEO was really simple. I said, okay, so you classify your vitamin C drink as functional, which is industry practice. Do you really think your vitamin C drink is really providing the function that you claim it is providing? Because if it's not, there's just that long you can fool your consumers. Never assume your customers are silly. And I think she looked at me like, what kind of question is that? So I really enjoy this kind of interaction a lot in my day-to-day job.
Yeah, and just pick up on what you're saying, because the quote actually is quite representative in the sense that, I think about private equity and I think about the people that we work with and invest in. It's all about calculated risk. So we're doing the underwriting, we have all the processes in place. And I think for me, what gives me the confidence to take those decisions is that early experience in entrepreneurship. When I was in my teens and 20s, like, we did not know what we were doing, and we just got on and we did it and we built it, and just knowing that you can do that gives you a lot of confidence later. And if you think about the entrepreneurs that are setting up their own business, there's very few things in life that are more risky than coming out and setting up your own business from scratch. So I think the risk is there within women, but it needs to be brought out. There needs to be a reason, and in this case, it's about wanting to do something in their lives differently. That's that motivation for wanting them to overcome maybe the imposter syndrome or whatever it was that was holding them back, that makes them go ahead and start building their own companies.
Do you see a clear, distinct difference between how maybe some of your male colleagues approach that same risk appetite, whereas you may differ on that or not? Is there a divide between male and female? That's not right. Is there a distinct difference between...
And how we go about underwriting, I think, because I would say that what I see in the industry is the women, the professionals that I work with will often be more thoughtful about people issues in a way that the men working in the industries will go straight to the analytical side and the numbers, but often miss the big picture of the industry and the market and how to really put the assumptions together to reflect that. So I think there are, it's a massive generalization, but that is something I see within our industry, and definitely what I see in the boardroom.
Thank you. I really want to finish answering your question. We have gone over, so I'm going to throw over to Shanti to answer around the fear question in your performance.
Yeah, so it's kind of simple, really. I stopped caring about what people thought of me. um, because after being in the sport for so long, I realized that no matter what outcome, comes up from a race, people are never going to be happy with my achievements. It's either going to be, oh, she's not good enough anymore, or if I do well, it's going to be she has more room to grow. She can do so much more. So I began to, just basically stop worrying about what people were thinking of me and started doing it for myself. I mean, it's my journey at the end of the day, and it shouldn't matter what people are thinking of me and my abilities and why I'm deciding to do what I do. So yeah, it was pretty simple. And once I made that change, things became so much more bearable and understandable, and I felt a lot more free when I was running.
That's amazingly wise words. I love that. Thank you. And lastly, Pamela.
Honestly, I don't have much to add. I agree with what everyone said here, but I do have to say there is that men are from Mars, women are from Venus, which I do agree on. And going back to at the very beginning when I said I felt like I had a higher tolerance, the key word there being I felt. And when I reflect upon it, I think, where did this confidence come from? I had an older brother, and he was a huge influence on me. And that goes back to the gender. And so if I really dig deep, fundamentally, yes, there is something there. And as a result of that, and if we do identify that, then there should be more support for female investors.
I didn't quite articulate my question to you on this
Yes.
correctly. What I was actually asking was, it's definitely my experience that my daughters and the women in my life want to know more about what they're about to go into, whereas my sons and the men in my life don't seem to care. They see, and do you see that in your field, where a lot of the people that want to be financially literate before they embark are female?
Okay. So we're a financial literacy company for women. So we only engage women. So it's difficult for me to draw the conclusion. But sorry, go ahead.
No, go ahead.
But the reason that we are for women is because women are obvious. Financial education is gender neutral, okay? So we're not teaching anything specific for women. What we are doing is we're representing women by having women financial experts. We're removing some of the jargon that has historically been thrown into financial education just for fun, to make it sound more complicated and more, complex. And so we remove all of that. We don't dumb it down. We just make it relatable. We use people, and so to answer your question, I think answering your question is that young girls and young women, I think, have a little bit more of a question mark around their future than the men do. And I think it comes back to the confidence, actually. And I do think a confidence gap actually exists. And I think it starts when we're very young children. And that's why I think that Sophia, financial education generally, gender-specific financial education, is absolutely necessary, because I think the future for girls and young girls is much less known than for boys, who I think have from a very early age, everything around them socialized, parenting, schooling. We're more likely to talk to boys about finance, about business, than we are girls. We're just not socialized as girls around these topics. So there's question marks that we have a lot more, I think, than boys have, this kind of innate confidence or perceived innate confidence. Does that answer your question?
I think it does, yeah.
Okay, thank you so much to our panelists. Thank you to Shanti, who's joining us today from Korea, to Jennifer, Pamela, and Pauline. Thank you to CMC Markets Singapore for having us here today, and thank you for all your amazing questions and engagement and listening to us today. Thank you.
Thank you so much, ladies, for your discussion points. It was fantastic. No, talk away, chat away, all good. Just a brief note, and thank you for all our guests.